All right, ready to dive deep. Today is Warren Buffett, one of the most successful investors ever. We're going to break down one of his talks, all about the stock market and building wealth, but not the way you might think.
Yeah, it's funny, Buffett, he doesn't really talk about those get-rich-quick schemes or hot stock tips, all that stuff. He's got a whole different approach.
Yeah, he really does. So Buffett starts off talking about buying his first stock, City Service Preferred, when he was just 11 years old. It's like he was hooked on the market, even as a kid.
Oh, yeah, he was. And, at first he approached it like a lot of people do when they're starting out, trying to predict, which way the stock price would move based on charts, patterns, all that. He even talks about reading books about technical analysis, trying to figure out what the price fluctuations meant, like there were secrets hidden in there.
So he was trying to time the market perfectly, make those quick profits, huh?
Exactly. But then things change. When he was 19, he finds this book, The Intelligent Investor by Ben Graham. Basically, it's like the Bible of value investing, if you ever read it.
I haven't yet, but I've heard it's pretty amazing. It changes how you think about investing.
It really does. So this book completely changed Buffett's perspective. You see, technical analysis, what he was doing before, that's all about trying to figure out where a stock price is going to go. Kind of like predicting the weather, right? But Graham's approach, value investing, it's about understanding the business behind the stock. It's like instead of betting on a horse race, you own the horse itself.
Gotcha. I'm starting to get the difference. So instead of just chasing those fast profits, he started focusing on the long-term value of a business. Is that right?
Exactly. It's like this. Imagine you want to buy, let's say, a local bakery. Technical analysis, that would be like trying to guess if the price of their bread is going up or down next week. But value investing, that's like, looking at the ingredients they use, the location, their customers, really understanding what makes that business strong.
So you're not just buying a piece of paper, a stock. You're buying a piece of a real, living business. That makes it a lot more real somehow.
That's the big idea that comes from Buffett. He says, you are not buying a stock, you are buying part ownership in a business. And that makes a huge difference. You start thinking like an owner, not like someone just trying to make a quick buck. You're looking for businesses, you understand? Businesses with what he calls a moat, meaning they have a strong competitive advantage, something that makes them stand out. And of course, you want them to be run by people who are competent and honest.
That moat thing is interesting. Can you tell me a little more about that?
Sure, a moat. Well, for Buffett, a moat is anything that gives a company a lasting edge over everyone else. Could be a really strong brand, or a unique technology, or maybe they have a cost advantage, or even just really loyal customers. Like think about Coca-Cola, right? Everybody knows their brand. That's a massive moat. Really hard for other companies to compete with them.
Ah, that makes sense. So finding companies with these strong moats is a big part of his strategy for succeeding in the long run, right?
Absolutely. It's all about finding businesses that can last, that can handle those economic ups and downs, and keep making profits year after year.
So patience is pretty important too with this approach.
Oh yeah, it's crucial. Buffett actually said, the stock market is a device for transferring money from the impatient to the patient. Short-term fluctuations don't matter to him. He's thinking about the long game. He's held some of his investments for decades, Remember, he started investing way back in the 1940s, so he's seen a lot.
Wow. So he's not just talking the talk, he's walking the walk for decades.
And that's why people listen to him, He's not just flipping stocks for quick profits. He's a builder. Sees the potential in great businesses and holds on to them for the long haul.
This long-term thinking seems to be at the core of everything he does, huh?
Yeah, I think you're right. And this goes back to another point he makes. You don't have to be a genius to be a successful investor. In fact, he's even cautious about thinking too much. What really matters, he says, is having the right orientation, a focus on really understanding how businesses work and being willing to be patient. And he's got this great quote. You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ.
So it's more about how you think than how smart you are.
Exactly. It's about staying in control, not panicking when the market drops, not getting caught up in all the hype when everybody's buying.
Being rational, being disciplined, even when everyone else is losing their cool.
That's it. And that's something anyone can learn, doesn't matter what your IQ is.
This is really interesting. Usually you hear all this stuff about trying to outsmart the market, but Buffett's approach is like the opposite. It's about being patient, being disciplined, and focusing on what really matters.
Yeah, he's not trying to predict the future or find the next big thing. He wants solid businesses that he understands, ones he can hold on to for the long term.
And this leads us to another cool concept. He talks about the no stock market thought experiment.
Yeah, this is one of my favorites. He says, imagine there is no stock market. Like, you can't just buy and sell shares whenever you want. If you want to invest, you have to buy the whole business.
Okay, I see where he's going with this. It forces you to think about investing in a whole new way.
Exactly. If you were going to buy a whole business, let's say a farm or a restaurant, you wouldn't jump in without really thinking about it, right? You wouldn't just base your decision on a feeling or something your neighbor told you. You would do your research, analyze their finances, talk to the people running the business, and make sure you understand the whole industry.
So you're applying that same careful approach to buying a stock as you would to buying a whole business, even if you're only buying a tiny piece of it.
That's the idea. Think like you're an owner, even if you're just a small shareholder.
Makes sense. It helps you cut through all the noise and really see what's important. The actual value of the business.
Exactly. That's a key part of his approach. He doesn't get caught up in all those daily ups and downs of the stock market. He cares about the long-term health and how profitable those businesses he owns really are.
This is giving me a lot to think about. So much of what you hear about investing is about trying to be clever, trying to predict the future. But Buffett's approach is much more grounded, even a bit humble, wouldn't you say?
Yeah, I think so. He's not pretending to have some magic formula for getting rich quick. He's saying, do your homework, be patient, and invest in businesses you understand, businesses you believe in.
And he's definitely proof that it can work. His track record is amazing.
For sure. And that brings us to another interesting part of his philosophy.
Yeah.
His unwavering belief in the American economy.
Yeah. He seems to have this incredible faith in American ingenuity, in the long-term prospects of the country.
He really does. And it's not just blind faith. It comes from watching and investing for decades. He's seen how American businesses have adapted, how they innovate, how they thrive, even through wars, recessions, all those technological changes.
So what specifically makes him so optimistic about America? What does he point to?
Well, he talks about how American businesses are constantly coming up with new ideas, new products, new ways of doing things. That entrepreneurial spirit, he sees that as the engine driving American prosperity.
And that spirit, combined with, a free market system, creates a really powerful force for growth, right?
Exactly. He believes competition, even though it can be chaotic sometimes, ultimately leads to better products, lower prices, and a better quality of life for everyone.
And he's not just talking about the rich elite. He sees these benefits reaching everyone in society, right?
Definitely. He often points out that even the poorest Americans today live better than the richest people just a few generations ago.
That's a pretty bold statement.
It is, and he backs it up with real data. He talks about how the average American now has access to things like flying, instant communication, advanced medical care. These were things only super rich people had before.
And he attributes all this progress to, the unique mix of freedom, opportunity, and innovation that America offers.
That's right. He thinks America creates an environment where people are encouraged to take risks, chase their dreams, invent new things. And that, he argues, is what ultimately makes America so strong economically.
Okay, now I'm starting to see the connection between his investment philosophy and his belief in America. He's basically saying that what makes a business successful innovation, thinking long-term, focusing on the fundamentals, those same principles also apply to an entire nation.
That's a great point. He's seeing the bigger picture, how business, economics, and human potential, it's all connected.
This is all really fascinating, but I'm also curious to know more about how his belief in America actually translates into investment strategies. Does he prefer certain industries or sectors?
That's a great question, and definitely something we can delve into. But first, let's take a closer look at one of Buffett's thought experiments, a really powerful one. It really challenges how we think and gets to the core of his investing philosophy.
I'm all ears. Tell me about it. Okay, so you were going to tell me about another one of Buffett's thought experiments. What is it, and what does it tell us about his approach to investing?
Right, so he often talks about this idea of Mr. Market, which he actually got from his mentor, Ben Graham. Imagine Mr. Market is this, kind of emotional guy who comes to your door every day wanting to buy or sell stocks. Some days he's super happy, like crazy optimistic, willing to pay a fortune for anything you're selling. Other days he's all gloomy, pessimistic, practically giving stocks away.
So Mr. Market is like what the stock market's mood swings personified.
Exactly. And the key, according to Buffett, is don't let Mr. Market control what you do. Don't get swept up in all that emotional back and forth. Instead, focus on what the businesses you're looking at are really worth, just like you would if you were buying the whole company.
So when Mr. Market is super optimistic, don't let that trick you into thinking a company is worth more than it is. And when he's down in the dumps, don't let his pessimism make you sell a good business for a cheap price.
You got it. Buffett's point is the stock market is just a way to trade pieces of businesses, and those daily ups and downs often have nothing to do with how much those businesses are actually worth. He wants investors to think for themselves, do their own research, and make decisions based on a company's real value, not on Mr. Market's whims.
This is really powerful stuff. It's a whole different way of looking at the market than what you usually hear.
It is, and it all comes back to what we were talking about before, thinking like an owner, not just someone trying to make a quick trade. If you owned a business, you wouldn't sell it just because some crazy guy at your door offered you a ridiculously low price, right?
Definitely not. You'd know what your business is worth, and you wouldn't let Mr. Market's bad mood change your mind.
Exactly. Same thing with stocks. Don't let those emotional swings mess with your judgment.
So how does this all relate to his belief in the American economy?
Well, Buffett sees the whole American economy as like a giant collection of businesses, all driven by innovation, people starting new things, and that competitive spirit. And even though the market goes up and down, even though there are recessions and crises sometimes, he believes that American businesses, over time, they're going to keep creating value, keep building wealth.
So even though Mr. Market might have his bad days, he's basically saying that American businesses overall are a good long-term bet.
That's a great way to put it. He's betting on American ingenuity, on people's ability to come up with new ideas and solve problems. He's betting on the American spirit.
Okay, so let's get practical. If someone wants to follow Buffett's approach, how would they actually choose companies to invest in? Are there any rules he follows?
Oh yeah, there are. He looks for companies with a few key things. First, he wants businesses that are easy to understand. He stays away from companies with those super complicated business models or ones that are in industries that are always changing.
So stick with what you know, what makes sense to you.
Right. Second, he wants to see companies with a good track record, ones that have shown they can make money consistently, even when the economy is doing poorly. He wants to see a history of success.
So no risky startups or companies with really up and down earnings?
Nope, he's not a venture capitalist. He wants solid businesses with a proven track record. Third, he looks for companies with really good management teams, people who are competent, honest, and really care about the shareholders. He actually says he looks for managers who treat the company's money like it's their own.
So he's not just looking at the numbers, he's also trying to figure out the character of the people running the business, their integrity.
Absolutely. And last but not least, he wants companies that are available at a good price. Not just great businesses, but great businesses that the market is undervaluing, trading for less than what he thinks they're really worth.
And this brings us back to intrinsic value. How does Buffett actually figure out how much a company is worth?
It's complicated, involves a lot of analysis and judgment, but basically he's trying to estimate how much cash a business will generate in the future, and then discount that back to today to figure out a fair value. He uses different metrics and models, but it's not an exact science. It's part art, part science.
Sounds like you need a lot of knowledge and experience to do that kind of analysis.
You do, but the main point is, Buffett's not just guessing. He's doing his research, digging into the numbers, really understanding the business, and making smart decisions based on what he thinks the company is actually worth.
So even though he's so successful, there's a lot of hard work and discipline behind it.
Definitely. And that's an important lesson for anyone who wants to invest, no matter how much experience they have. Just like anything else, success in investing takes work, patience, and being willing to learn and adapt.
This all makes so much sense. But I'm wondering, how does Buffett apply these ideas in a world that's always changing? With all these new technologies and industries popping up all the time, does he ever invest in tech companies?
He does, but very carefully. Remember, he likes businesses he can understand, right?
Oh.
And for a long time, he stayed away from tech companies because he thought they were too complicated, their business models too hard to predict.
So all that rapid change in the tech world made him a little uneasy.
Yeah, but lately he's started to invest a bit in tech, like in companies like Apple and Amazon. These are companies with huge reach, strong brands, and he thinks they have a clear path to keep growing and making money.
So he's not totally against tech. It's just that he's looking for those same fundamental things: a strong business, good management, and a fair price, even in a fast-moving industry like tech, right?
You got it. He's not chasing the latest trends or betting on risky ventures. He's sticking to those tried and true principles, even in those new and constantly changing sectors.
Okay, I can see how his approach is both timeless and flexible. It's about understanding the core of how businesses work and then using those principles across different industries and no matter what the economy is doing.
Exactly. And that's one of the reasons why what Buffett says still resonates with investors today, even though the world is so different from when he started investing decades ago. That focus on value, being patient, and thinking long term, that's still as relevant as ever.
So we've covered a lot. The nature of the market, thinking like an owner, finding companies with strong fundamentals. But there's another really important part of this philosophy that we haven't touched on yet, his emphasis on ethical behavior.
You're right, that's important. Buffett believes that doing the right thing is crucial for success in the long run, both in business and in life. He's known for being honest, fair, and always trying to do what's right, even if it's not the easiest or most profitable thing.
So it's not just about making money, it's about making it the right way.
Exactly. Buffett has said many times that he wants to be able to look at himself in the mirror every morning and feel good about the decisions he made. He believes that ethical behavior is not just the right thing to do, it's also good for business.
How so?
Well, he says companies with a strong ethical culture are more likely to attract and keep talented employees, build good relationships with their customers and suppliers, and avoid those big scandals and legal problems. In the long run, he thinks being ethical actually gives you an advantage.
So it's not just about avoiding bad publicity, it's about building a business that lasts, one that's based on trust and respect.
That's it. And this ties back to what we were saying about good management. Buffett wants to invest in companies run by people he trusts, people who share his values and commitment to doing things the right way.
It's interesting how all these pieces connect. Value in businesses, having a long-term perspective, believing in the American economy, and now this emphasis on ethics. It all fits together.
It does, and it's a philosophy that's worked really well for Buffett over his career. He's not just one of the richest people in the world, he's also one of the most respected. That's because he's shown you can be successful and ethical, you can build a great business, and make a positive contribution to society.
It's inspiring to see someone who's achieved so much, but still stayed true to what they believe in.
It really is. And it reminds us that true success isn't just about money, it's about building something that lasts, something that makes a real difference.
Well, this deep dive into Warren Buffett's world has been eye-opening. I'm seeing the market, even the world, in a whole new way.
That's great to hear. And remember, Buffett himself is a constant learner. He's always reading, watching, trying to learn more and understand better, and that's something we can all do.
For sure. So as we wrap up this part of our deep dive, what's the most important thing you want listeners to take away?
I think the biggest lesson from Buffett is this. Investing isn't about gambling or trying to get rich quick. It's about understanding how businesses work and making smart decisions based on what they're really worth. It's about being patient, disciplined, and thinking long-term.
That's great advice. And it's something we can all use, whether we're investing in the stock market or in our own lives.
Exactly. It's about making choices that will help us succeed and be happy in the long run.
Okay, I think we've covered a lot of ground here. What else can we learn from Buffett's incredible journey? Okay, so we've talked about Buffett's investment strategies, how he thinks long-term, and even his focus on doing things ethically. But I'm kind of curious about his personal life, Like, what can we learn from how he uses his time and money?
Yeah, that's a good question. Because the way Buffett lives, his personal habits, they actually mirror his investment philosophy in some interesting ways. Like, he's known for being really frugal, even though he's one of the richest guys in the world. He lives in the same house he bought back in 1958, and he enjoys, really simple things. McDonald's for breakfast, cherry Coke.
It's almost like the opposite of what you'd expect, right? You'd think someone with all that money would be living in some crazy mansion, buying all kinds of fancy stuff.
You would, but Buffett, he sees spending money on stuff he doesn't need as a waste. Not just of money, but of time and energy too. He'd rather use his time and money on things that are really important to him, like his work, his philanthropy, and spending time with people he cares about.
So it's like he's taking those value investing principles and applying them to his own life, focusing on what gives him the biggest return in terms of happiness and fulfillment.
Exactly. He doesn't care about keeping up with the Joneses or having a bunch of stuff just to show off. He's happy with a simple life that lets him focus on what he truly values.
That's a powerful message, especially these days when everyone's telling you what to buy and how to live. Buffett shows us that real wealth isn't just about money.
For sure. And it's not just about being cheap either. It's about spending your money in a way that lines up with what's important to you. And Buffett, he's incredibly generous. He's actually pledged to give away over 99% of his wealth to charity.
So he's not just sitting on his money, he's using it to do good in the world.
Exactly. And that brings us to another important part of his legacy, his belief in giving back. He sees philanthropy as a way to multiply his impact, to tackle some of the biggest problems in the world.
And he's not just writing checks. He's really involved in choosing the causes he supports, making sure his donations are used well.
Oh, yeah. He's super passionate about global health and fighting poverty, and he's given a ton of money to organizations working to help people in developing countries.
It's pretty amazing to see how he's using his wealth and his influence to make a difference.
It is. And it reminds us that we can all give back no matter how much money we have. Volunteering our time, donating to a cause we believe in, even just being kind and compassionate to the people around us. We can all make the world a better place.
So as we wrap up this deep dive into the world of Warren Buffett, I'm really impressed by how much wisdom he has to share. He's not just some investment expert. He's like a philosopher, a philanthropist, a role model for living a life that really matters.
Totally agree. What he has to say goes way beyond just finance. It's full of valuable lessons for anyone trying to figure out life, make good choices, and find happiness that lasts.
He's truly one of a kind, a thinker who's left a real mark on the world.
He has. And his story is a reminder of the power of always wanting to learn, always growing, always finding new ways to create value and make a difference.
It's really inspiring. It shows you it's never too late to learn, to grow, to make a positive impact.
Exactly. And to wrap up our deep dive today, I want to leave our listeners with one last thought from Warren Buffett himself. He said, "It's better to hang out with people better than you are. Pick out associates whose behavior is better than yours, and you'll drift in that direction. Surround yourself with people who inspire you, challenge you, who make you want to be a better version of yourself."
That's some great advice. And on that note, that's a wrap for this deep dive. We hope you enjoyed exploring Warren Buffett's wisdom, and we encourage you to keep learning from him, applying his ideas to your own lives.
Thanks for joining us.